Danny Blair. Danny, thanks so much for joining us. Yeah, it's certainly seeming harder and harder, isn't it, for Aussies to buy a property. What are some of the main tips into perhaps a first home loan?
Thanks for having me, Janie. Listen, I think the first main tip for around a home loan is to do your market research. There's a variety of different options around different deposits, schemes, concessions, and different loan options out there. Probably the recommendation would be that you meet a mortgage expert to give you a clear understanding of how much you could actually borrow and afford. This will take a lot of the stress and pressure out of the home loan process and give you a little bit of time to actually enjoy the actually enjoyable bit of the process, which is actually find the property available.
Yeah, because as you said, there's so much to contend with. You've got stamp duty, you've got concessions and so much. But yes, it can be an enjoyable time.
That's spot on. Stamp duty can be anywhere from 3 to 4% of the purchase price. Some states have different concessions and waivers on, depending on your personal circumstance. Other fees to consider are things like lender's mortgage insurance, where the banks or lender will charge you an insurance fee if you've got less than 20% deposit. And the other fees to consider are also things like your legal services for the transaction, which can cost you anywhere from $500 to $2,500. It's really important that you're speaking with your mortgage expert to make sure you work out which of these fees are applicable for your circumstance, and you're taking them into consideration for your budget and also your deposit, because a lot of particularly first home buyers don't do this when they're looking to purchase their first property.
And also interest rates, which look like they may drop this year and the second half of the year, possibly looking a little bit more stable, but we don't know at this stage. But how do we get the best deal?
Listen, the best thing you can do is talk to your mortgage expert. There is so many different variety of options out there in the market at the moment, from different rates, different concessions, different everything else. I think it's vital that you speak with a mortgage expert. If you are talking to your bank or lender, please ask them for a better rate. Or even better, get your mortgage broker to go to them on your behalf and do all of the haggling and everything for you and do all the hard work on your behalf. In 2013 at Aussie, we had 6 out of 10 of our borrowers actually receive a better rate from going away from the big four banks. We are seeing a less competitive market at the moment. With the rising interest rates, we've seen a reduction of the cash rebates and incentives that are available. So overall, we're just seeing the overall market less competitive than what it was, say, 12 months ago.
What do we have to be mindful, though, if we do transfer from one bank to the other? Are there fees that we have to watch out for or anything else?
Yeah, you've definitely got to be aware of all the fees associated with the transaction. So you've got to be wary of any discharge fees from your current bank. Also, if there's any state government charges to re-register the mortgage, as well as the ongoing fees for the application fees for the new actual loan when you're changing. We always recommend that at a minimum, though, once a year, you're contacting your bank or getting your broker to do it on your behalf to make sure you're on the best rate possible. What we don't want to see is the mortgage creep. People get a loan, they put it in the cupboard, they forget about it. And then 2 or 3 years later, they find out that 1 or 2, 3% above where they should be and where the market is. This is where a mortgage broker comes into play to actually help you for the long term of the home loan, not just the initial purchase of the property and the home loan you get when you first start out.
All right, and can you give us a bit of a snapshot of what we did see in 2023?
Listen, 2023 was probably the hardest year for first home buyers we've seen in the last 12 years. We had rising interest rates, we had a slow wage growth, and we had a lack of housing supply. In saying this, we actually seen an increase in first home buyer activity in the market to higher than normal levels. 18% of the market was first home buyers in 2023, which is a 6% jump on 2022. At Aussie, we actually had 26% of all of our borrowers be first home buyers in 2023. I think what this shows is that although it is tough and challenging, as you've alluded to, Janine, I think what it actually does is shows that first home buyers are actually willing to give up on quite a lot before they're willing to give up on their home ownership dreams.
And what about looking to 2024? What are your predictions?
Yeah, we're a lot more positive for 2024. We feel that we should see a stabilisation around interest rates this year. We're really hoping that the RBA, we have a couple of cash rate reduction towards the back end of 2024. We also think that the housing supply market should return to more normal levels than we've seen in 2023.
All right, great analysis. Thanks very much, Danny Blair. Thanks for joining us today.
Pleasure.